Ahoy there, and welcome to the deep dive. Where today we're setting sail for the exciting world of cruise line stocks.
That sounds fun.
Specifically, we're diving deep into Carnival. To answer that age-old question for investors, is it a buy, sell, or hold? As we look ahead to 2025, our compass for this journey is a recent article from the Motley Fool.
Oh, yeah, I saw that one.
It's aptly titled, "Is Carnival stock a buy, sell, or hold in 2025?" It's published just yesterday.
Hot off the press.
So imagine you're thinking about investing in the cruise industry,
Okay.
specifically in Carnival. This year's been quite a ride for them, with a 92% stock gain.
Yeah, that's really something.
They're boasting record bookings,
Really?
a brand new exclusive island destination in the Caribbean,
Wow.
and their stock price is cruising at a 52-week high.
I'm sensing a theme here.
But we're not here to just ride the hype wave.
Right.
We need to understand the currents driving this surge and see if they have the strength to carry this momentum into 2025.
Yeah, makes sense. We don't want to get caught in the riptide. So where do we start?
Well, why don't you give us a little background on how Carnival has managed to steer out of the pandemic, the doldrums there?
Well, one of the clearest signs of their comeback is the incredible influx of bookings.
So people are ready to set sail again.
They are, and they're putting their money where their wanderlust is. Carnival is currently sitting on a whopping $6.8 billion in customer deposits.
Wow, that's a serious treasure chest of prepaid vacations.
Yeah, to put that into perspective, that's $500 million more than they had at this time last year.
So it sounds like people are practically throwing money at them to get back on those ships. But the article also mentions that Carnival is seeing a significant increase in something called net yield.
Yes.
And for those of us who aren't fluent in Wall Street jargon, can you break out what that means?
Of course. Net yield is basically how much revenue Carnival gets out of each available space on their ships every day.
Okay.
You can think of it like this. They have a certain number of cabins, and the net yield tells us how well they're filling those cabins and at what price.
So a higher net yield equals more money in Carnival's pocket.
Exactly, even if they don't sail at full capacity.
So it's not just about filling every berth. It's about maximizing the revenue from each passenger.
That's right. A very smart strategy.
And according to the Canvil, the Motley Fool Carnival is projecting a net yield increase of 10.4% for 2024. Now that's significant, especially when you consider their projected cost increase is only 3.4%.
You're reading my mind. They're set to bring in more revenue per passenger, while keeping their expenses relatively stable.
Right.
This all points to a very healthy profit margin, and those profits are fueling some seriously optimistic financial projections.
Well, let's hear them.
Okay, so they're forecasting an adjusted EBITDA, that's earnings before interest, taxes, depreciation, and amortization, of $6 billion for 2024.
Okay.
Think of EBITDA as a measure of a company's core profitability.
So it's like looking at their earnings without all the accounting noise.
Exactly.
And a $6 billion EBITDA represents a 40% jump from this year. That's a serious leap forward.
It is, and that positive trend extends to their earnings per share, or EPS,
Right.
which is essentially the portion of a company's profit allocated to each outstanding share of common stock.
Got it.
For Carnival, EPS is expected to be consistently positive in 2024, a complete turnaround from the $0 result in 2023.
So that's a very encouraging sign for investors.
It is.
It definitely paints a picture of a company back on course and sailing towards profitability. So we have a pretty captivating comeback story and some really impressive financial projections. What else has the Motley Fool so enthused about Carnival's prospects?
Well, they point to a couple factors driving this cruise industry revival. First, there's a whole new wave of first-time cruisers, embarking on their maiden voyages.
So a whole new generation of passengers.
Exactly. This means Carnival has a vast, untapped market to explore, potentially attracting a whole generation of new loyalists.
So it's like discovering a hidden cove teeming with potential passengers. But it's not just about attracting new cruisers. The article also highlights a growing trend of passengers willing to splurge on, premium cruise experiences.
Oh, yeah.
People are ready to treat themselves after being landlocked for so long.
Indeed. This shift toward higher-end experiences plays perfectly into Carnival's strategy. They're expanding their fleet with larger, more luxurious ships, packed with amenities and features designed to create those unforgettable, Instagram-worthy moments.
So they're not just offering a way to get from point A to point B, they're creating a whole experience.
Exactly.
But with all this talk of expansion and luxury, doesn't that raise some potential risks? I mean, even the smoothest seas can experience unexpected squalls.
You're absolutely right. Even with all this positive momentum, there are some potential headwinds that could impact Carnival's course in 2025.
Like what?
Well, ironically, their stellar performance in 2024 could become a hurdle. The Motley Fool calls it the tough act to follow.
So they've set the bar so high that it might be difficult to maintain that same level of growth.
Exactly.
So investors could become wary if those record-breaking numbers start to level off.
Precisely. And while Carnival is projecting strong bookings for 2025, investors always have their eyes on the horizon. And the further out you look, the murkier the waters can become.
It's like trying to predict the tides months in advance. There are just too many variables at play.
Exactly.
And then there's the competition. Carnival isn't the only ship sailing in these waters.
Right.
They're facing stiff competition from rivals like Royal Caribbean and Norwegian Cruise Lines.
All vying for a bigger slice of the passenger pie.
So it's a battle for the hearts and minds
And wallets.
of vacationers.
Yeah.
And with all these cruise lines expanding their fleets, could we see a scenario where supply outpaces demand, leading to a potential price war?
That's definitely a possibility. If there are more cabins than eager passengers, it could put downward pressure on ticket prices, ultimately squeezing those profit margins.
So even if the cruise industry as a whole is thriving, individual companies could still face challenges if they don't navigate these competitive waters strategically.
Absolutely. And then there's the broader economic climate to consider.
Right.
The Motley Fool specifically cites a weaker labor market or a slowdown in consumer spending as potential threats to Carnival's continued growth.
Yeah, that's a good point. I mean, if people are worried about their jobs or their finances, they're less likely to splurge on a cruise vacation.
Exactly.
It becomes a discretionary expense that can easily be cut.
Right. These macroeconomic factors are like unpredictable currents that can shift the course of even the most well-managed company.
Okay, so we've charted the potential risks, along with the potential rewards. But despite these uncertainties, the Motley Fool remains confident in Carnival, largely due to their attractive valuation. You mentioned earlier that Carnival is trading at 9.4 times its 2024 consensus EBITDA. For those of us who aren't financial analysts, can you unpack what that means and why it's significant?
Sure. That 9.4 number represents Carnival's enterprise value to forward EBITDA ratio. In simpler terms, it's a way to assess a company's value relative to its earnings.
Gotcha.
A lower ratio generally suggests the company is undervalued by the market.
Okay.
To understand why this is considered attractive, let's compare Carnival to its rivals. Norwegian is trading at 9.8 times its EBITDA, and Royal Caribbean is at 13.1.
So Carnival looks like a relative bargain.
You got it. The Motley Fool sees this as potential for valuation expansion.
What does that mean?
They believe that as Carnival continues to deliver strong financial results, investors will recognize its true worth, and the stock price will rise to reflect that value.
So they're betting that the market will eventually catch up to Carnival's actual performance, that the stock price will experience a natural upswing.
Right.
But it's not a guaranteed outcome.
No, of course not. Remember, this is just one interpretation of the data. Investing always involves a degree of uncertainty. Even with a healthy balance sheet and strong projections, there are external forces that could impact a company's performance.
It's like planning a cruise itinerary. Even with the best laid plans, unexpected weather or port closures can force you to adjust course.
Exactly. The key is to be aware of both the potential rewards and the potential risks, to understand the factors that could influence the journey, and to make informed decisions based on your own individual investment goals and risk tolerance.
So as we approach the final leg of our deep dive into Carnival stock, let's shift our focus to some of the larger questions that the Motley Fool's analysis raises. We've explored the financials, the short-term outlook, and the potential risks. But what about the long-term trends shaping the cruise industry as a whole?
That's where things get really interesting. While the Motley Fool offers a generally optimistic outlook, there are some potential disruptors on the horizon that could significantly alter the course of the cruise industry in the years to come.
Disruptors. Are we talking about rogue waves or pirate attacks?
Well, maybe not literally, but metaphorically speaking, yes. Think about technological advancements, evolving consumer preferences, even geopolitical shifts. These are all forces that could reshape the cruise industry landscape.
Okay, I'm intrigued. Let's delve into these potential disruptors and explore how they might impact Carnival's long-term prospects. Welcome back to the deep dive.
So as we wrap up our exploration of Carnival stock, I'm curious, did any of those potential disruptors we talked about last time, did those make you rethink the future of the cruise industry at all?
I think it definitely gave us some food for thought.
Yeah.
But, while those long-term trends are really fascinating, let's bring it back around to the present. We've covered Carnival's amazing comeback story. Their strong financial performance, the reasons to be optimistic, and the potential risks that are out there that could, rock the boat, right? And we can't stress enough, it's important to consider your own, risk tolerance when you're looking at investing. Really dig deeper than just the headlines and form your own conclusions based on multiple sources of information. That's what this deep dive is all about.
Absolutely.
Empowering you, the listener, to make those informed investment decisions.
That's right. But before we, disembark from this whole exploration, I do want to leave you with one final thought-provoking question, something that wasn't, directly addressed in the Motley Fool article.
I'm all ears.
What other factors beyond those we've already discussed might impact the cruise industry in the coming years?
That's a good question.
Think about things like shifting demographics, evolving travel patterns, and even the rise of alternative vacation experiences.
Right, like what if younger generations, like those Gen Z and Alpha travelers, what if they prioritize different types of experiences? Maybe they're more drawn to ecotourism or adventure travel or immersive cultural experiences rather than the traditional cruise model.
Exactly. And what if the very definition of luxury evolves? What if travelers begin to, prioritize unique, personalized experiences over the standard cruise ship amenities?
That's a really interesting point.
These are all trends worth monitoring as we consider the future of the industry.
Yeah, because at the end of the day, the success of any company, including Carnival, hinges on its ability to adapt, innovate, and anticipate those changing desires.
Yeah.
It's like a ship adjusting its sails to navigate shifting winds.
Exactly.
Those who can stay ahead of the curve are the ones who will truly thrive.
Right.
So as you consider, whether or not to invest in Carnival, remember that this deep dive is just the beginning of your journey. Keep exploring, keep asking questions, and keep that adventurous spirit alive.
Absolutely.
And if you're eager to delve deeper into the Motley Fool's analysis, you can find a link to the full article in our show notes. Until next time, happy sailing.